I think they realize that silver is far more than industrial. It's strategic. And when you have the ability to suppress the price, create an illusion using futures contracts, well, that works until the world says, we're going to stand for delivery. This is the existential threat. This is the setup. This is the squeeze that is potentially happening. Now, guys like me have been screaming this for a long time. Um, you can't run from mathematics. This is coming down to mathematics. I guess I'd say it this way. The only way to successfully manipulate a market atom over a long period of time is to push it in the direction that's going. And for a long period of time, no one wanted anything but Western securities and treasuries and didn't think about draining the LBMA or the COMEX or challenging it.
In a recent interview with Liberty and Finance, Andy Schectman, CEO of Miles Franklin, we present the clips of Andy's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
You can Google this right here, S.2768. That was October 14th, 1942. Long time ago, right? But look what it says right here. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces a year. That's 1942, 3 years ago, where I said there's 500 ounces of silver in the top of a Tomahawk cruise missile. And at the end of my speech, a man comes up to me and says, I work for the DOD. I actually helped design the Tomahawk. He says, I think there's silver in it, but I'm not sure how much. I'll get back to you. Never hear from him again. I go back last year. This was 2 years ago. There he is. He says, you were right. I'll be damned. There's between 13 and 14 kilograms in the cone of a Tomahawk. That's 500 ounces. And he showed me all sorts of pictures and this and that. And he says, I think there is in all of these high-tech weapons. We'll think of aerospace, think of all of the high-tech weapons that the United States and the military-industrial complex has been making and selling all around the world, fostering and funding and providing weapons to all these wars. And so they always used to report silver in the supply-demand numbers. Here's last year's supply-demand numbers. We had a 240 million ounce shortfall last year. The year before, right here, 265 million. But let's look at the demand here. Industrial, 9%. Electrical and electronics, 9%. Photovoltaics, that's solar panels, 20%. Brazing, alloy, and solders, other industrial, photography, jewelry, silverware. Where's military? Where is it? Now, this is the picture of the COMEX market, okay? Look at this. This is the green line or the red line are the four big commercial banks that have short positions. And I'm not, it's probably Citibank, Bank of America, JP, and Goldman. I don't know exactly who they are at the moment, but this is what the green lines are the red line. The green line are the largest 8 commercial banks, largest 8 traders on COMEX. So here's the bottom line. This right here represents 8 Western banks that hold the largest concentrated short position of any commodity traded on COMEX. Look at oil right way down here,
Wow.
right there. Silver, platinum, gold, palladium. But this is the largest concentrated short position. Now, the question is why? Now, here, remember what I said to you about the banks that are sophisticated, motivated, coordinated? Here's silver in the LBMA. You notice something? What they've been doing? They've been draining the world's exchanges because they know that the Western military-industrial complex, in my mind, has been suppressing the price of silver to make high-tech weapons. And if the price of silver went parabolic, it would be a problem. So they make it think that it is just an archaic relic from years gone by, and there's no reason to own it. But then I'll ask you, why are there the 8 Western banks suppressing the price of silver more than anything else? Why? What is the reason? Maybe it has something to do with this, or maybe it has something to do with this. So my point I'll stop sharing is simply this, that silver is the most manipulated commodity on the planet. And remember in the LBMA, they're trading every single day 3.5 times global annual mine supply, of which 90+% of those contracts are paper until there's a problem. And that problem is, oh my goodness, the exchanges are being drained. And the all-time biggest monthly delivery or exodus out of the LBMA, 70 million ounces was drained, or 20% of that float was drained in January. And then we see another 8 million ounces come out last month. So they're slowly draining the exchanges because I think these countries, India has imported over 800 million ounces in the last 4.5 years. That's more than is on COMEX and the LBMA combined. And I think they realize that silver is far more than industrial. It's strategic. And when you have the ability to suppress the price, create an illusion using futures contracts, well, that works until the world says, we're going to stand for delivery. This is the existential threat. This is the setup. This is the squeeze that is potentially happening. Now, guys like me have been screaming this for a long time. You can't run from mathematics. This is coming down to mathematics. I guess I'd say it this way. The only way to successfully manipulate a market atom over a long period of time is to push it in the direction that's going. And for a long period of time, no one wanted anything but Western securities and treasuries and didn't think about draining the LBMA or the COMEX or challenging it. Now, as I mentioned, these countries of China, Russia, Saudi Arabia, India, they're wealthy, coordinated, sophisticated, and motivated. And they are using this suppression that we've put on for far too long, like a jujitsu move, using your opponent's leverage against them. That's what is happening. And I really do believe Trump realizes this. And this is why he came in and said, we're going to tariff all of this stuff, do the exchange for physical, the Western, they're all saying, hey, we got to get the metal back here because we're naked, exposed on COMEX. Let's do an EFP. And then it starts to accelerate. And I think London said, wait a second. This might be bigger than we're being led to believe. I think it's bigger than we're all led to be believed. And my guess is that there's something in store big for gold and silver. Zoltan Pozsar, one of the smartest men I've ever met, said, we're in Bretton Woods 3. Well, Bretton Woods 1 after World War II when we took over for the pound sterling. Bretton Woods 2, loosely, when we signed the petro deal in 73 with the Saudis. Bretton Woods 3, a system, he says, is all about transparency in commodities, a la blockchain and physical commodities like gold. So what did Elon say? Let's put everything on a blockchain, the assets, the liabilities, the gold. What did Judy Shelton say? 50-year treasuries. And then she said, I want to see stable coins pegged off of them. All of this stuff on a blockchain. Where is gold held? In the gold revaluation account. Everyone's screaming, let's revalue gold that's marked at 42.22 an ounce. Revalue it, peg it to a level to back your 50-year treasuries, which are redeemable on a blockchain, transparency, and commodities. And it's not just gold that's coming back. So yeah, I think this is a time for people to I think realize that we're on the heels, it seems, of some monetary change where gold and silver will be added into the system along with digital technology to inspire confidence and trustworthiness in a system that's lost it, whether it be through inflation or weaponization of the treasury market, or just the way we've conducted ourselves with the world reserve currency. It's important to understand that when we talk about this game of rehypothecation of paper, where the Western system has been rehypothecating or suppressing the price of gold and silver, and we can talk or debate about what the reasons are, but they have done so using the leverage of paper contracts sold over and over and over and over and over again to the same players. That right now, as an example, there are 279 million ounces of silver stored on paper in London, but only 36 million ounces are actually available. So that means that the other 243 million ounces belong to players like the Bank of England or ETFs or whoever. They're not for sale. But this is standing against 380 million ounces in outstanding spot delivery contracts. 36 million ounces available, 380 million in paper, 10 times plus the leverage or the amount of deliverable contracts than there is gold. And so you have to wonder, is it really a T+8 week situation now because of trucks and manpower, or have they been caught with their hand in the cookie jar. They're 90% short on their ability to deliver. And in silver, Adam, it's even worse. In silver, the LBMA silver stockpile suffered its largest monthly decline since records began, down 8.6% in 1 month to 270 million ounces. So they have 270 million ounces available to be delivered, yet they're trading 2.9 plus billion ounces per day. That's 3.5 times annual global mine supply per day. These are the commercial banks that forever have been able to suppress gold and silver with leveraged futures contracts, naked, not backed by the actual metal to deliver, because these banks had the ability with massive checkbooks really just to overwhelm very large interests. And largely, these interests largely are believed to be sovereign wealth funds, family offices. In fact, when you take a look at the number of deliveries that are coming that are not for the banks, so the bullion banks are selling to other players. These other players are non-bullion banks. 17.5 million ounces of silver was transferred this month in New York from bullion banks to non-bullion banks, making it one of the largest transfers in COMEX history. And it's not the bullion banks. These are very sophisticated traders that are standing for delivery. And they're standing for delivery in London and they're standing for delivery in New York. But what is really different is my entire career, no one stood for delivery. And I've been doing this 35 years. Nobody stood for delivery. So at the same time, the public is going all in on Bitcoin, on NVIDIA, on Apple. You have the smartest money in the world. And let me make something very clear. It would be far easier for someone to write me a check for $50 million to buy gold and silver than it would be to stand for delivery on COMEX or the LBMA. You are talking highly sophisticated traders. And I think the common denominator in highly sophisticated and very wealthy is they know the information. Who are the sovereign wealth funds? Is it the central banks wearing a different hat, or the commercial banks wearing a different hat, or the very, very, very connected wealthy elite taking $4 billion in delivery onto COMEX from JP Morgan, who only does it on behalf of customers? So my point is that I don't care what market you pick, the insiders always move before the public. Is it ironic that the insiders are selling 6-1 and the hedge funds have their lowest exposure to the Mag 7 since for 22 months, at the same time the public's moving in that direction? Or how about what has the public been jumping into for the past 2 years as the central banks net have been selling? Oh yeah, that's U.S. Treasuries. 7 trillion record in money markets, all invested in Treasuries. All of, while the most well-funded and more importantly, well-informed traders in the globe are not only copiously accumulating gold and silver. The point I'm trying to get across is the repatriation, the taking possession of, removing counterparty liability. And in a world that is so systemically interconnected, incestuously so, that's a problem when dominoes start to fall. To your point, what could happen? Well, these bullion banks aren't just bullion banks. They're the biggest banks in the world. And these are very, very large Western money centers. You could say it's Deutsche Bank, UBS, Standard Charter, at the big European banks, or you could say it's Bank of America. Is there any coincidence that Warren Buffett's been dumping all his Bank of America? And Ted Butler, a fantastic gold and silver analyst of the COMEX who passed away, God rest his soul, before he died 6 months ago, was screaming that it's Bank of America who has 1 billion ounces short on paper in silver and 30 to 40 million ounces short on gold. Now, I could go into a long discussion why I believe silver has been manipulated. And I would say gold has been manipulated for a very long time for something called Gibson's paradox. It's the inverse relationship between real interest rates and gold. And forever, they suppressed gold because they maintained a situation of an illusion of wealth in a low interest rate environment where people's stock portfolios and their homes and 401ks all went up in value because rates were suppressed. It created distortions in asset prices and misallocations of capital and resources. Well, if you do that, you have to step on gold, because if gold doesn't pay a coupon or no return, well, low interest rates, Gibson's paradox would say, well, gold should be going much higher. But If you have very high interest rates, well, Gibson's paradox would say, well, you can buy treasuries with safety. The only difference this time is who wants to buy treasuries from the nation who's the most largely indebted nation on the planet. They've gone too far and they suppressed interest rates for too long and created these distortions.